Welcome to another video tutorial. In this video, I will be taking a technical dissection of the GBPUSD, and by the end of this video, you will have an insight into what my expectations are and how I intend to take advantage of any trading opportunity on the GBPUSD. Since this is going to be a follow-up detail here, I would like us to look at what really happened during the course of last week, as we had some couple of key moments that I will be glad that we revisit. So during the course of last week's trading session at the beginning of the week, we initially identified a consolidation phase between the 1.20650 and the 1.20300 level. And in fact, this consolidation phase was right within that major key level we had here, the 1.21 and the 1.20 area. So we were looking forward to buying if price action broke out of the 1.20650 and opportunity to sell if price action broke down the 1.20300 level. And in fact, what we saw was that price action broke down the 1.20300 level to trigger our sell position at this point, and we were also anticipating a further breakdown of the 1.2 level, but that did not happen as we saw price action climb back up into that channel where we had another position, had the breakdown of the 1.20300 level, a further breakdown of the 1.2 level, welcome additional position here, and we were able to ride the move down until we started seeing some buy pressure resume again here, but we were still in that position as price action went further to the downside. So we rode the move all the way down into the 1.196 level before the buy pressure happened here. And one thing we stated here was that if this happens, we already have a buy position above the 1.20400 level if price action ever comes back into that level. And this is what we had here. Price action dropped. I even mentioned here that we should get ready for the buy position. And we had the position triggered. Price action broke out the 1.20650, added another position before the sell pressure came in, though it was more of a retracement of that previous impulse leg here. And we saw how price action continued to climb to the upside. And this led to the situation we had here. And what we saw afterwards was a breakdown, though, and then price dropped further to the downside. And the key moment didn't come until on the 9th, that was on Thursday, where we finally saw the breakout of the 1.21 level. The first time during the week, price action would break out of that structure. We had our position triggered there. Then we anticipate another position at the breakout of the 1.21500 level, which happened, and price action actually moved considerable well in our favor before we saw the sell momentum that took us out of our position with some small profit. Later on Friday, we saw the situation here in anticipation of the consumer sentiment index. So we had this structure here between the 1.21250 and the 1.20900 level. And we looked out for breakdown of that structure, which we got our position triggered there, and we rode the move all the way down. And it was at this point that we closed the week on the GBPUSD. I will be dropping the link to to this commentary right in the comment section of this video. And if you are watching on my YouTube channel, you will be seeing it at the top right hand side of your screen. So with that being said here, I will be diving straight into the current structure. Since this is going to be a follow-up video to my previous analysis, I will be looking at it from what has been happening here in the last 2 weeks. So looking at the current structure we have here, it is very obvious that the bullish trend line that has been guiding bullish momentum here in the last 4 months, this one here, as you can see, was finally broken a couple of weeks ago, and you saw how it broke down the bullish trend line, which also shares a confluence with the 1.22500. And in fact, prior to the beginning of last week's trading session, we were looking forward to a situation where price might likely break down the 1.200 level to incite another wave of bearish momentum, or we might likely see a situation where price will come back to do a retest of the structure before another wave of bearish momentum will happen. However, what happened last week was quite interesting as we saw that price was caught within a channel as there was a consolidation phase between the 1.21 and the 1.200 level. And if we take into consideration this bearish engulfing candle here, we will definitely be leaning towards a trend continuation to the downside, as we might likely be seeing price action drop to the downside from that level. So we might be leaning towards a selling opportunity for this week. But if we take a closer look at the structure and look at what has been happening here since the month of November, you would notice that price action had actually been caught within a channel between the 1.24500 level and the 1.200 area. So what this simply means is that when price action gets into the 1.20 level, we have been witnessing buy pressure from that structure. And if price gets into the 1.245 level here, we have been witnessing selling pressure. And if we take into consideration the fact that the 1.20 level has been a strong buying niche in the last 3 months, we cannot just jump into conclusion of selling only if we cite an outright breakdown of the 1.200 level to the downside. As the buy pressure here that we noticed during the course of last week's trading session might lead into a situation where price will climb to the upside here, probably come to retest the 1.22500 or those bullish trend line probably before another wave of bearish momentum will be happening here. So in order to have a better perspective into what is really going on around here, we will really need to scale down to a much lower time frame where I have some key structures which we can be using to guide trading activity for this week. But before we go into the 4 hours time frame, I would like us to have a look at the economic calendar as we have a couple of macroeconomic events to look forward to that will be a key driver for price movement for this week. Now, looking at the economic calendar here, the first macroeconomic event is coming up on Tuesday, that's February 14th, as we have the GBP claimant count change and the unemployment rate. Then later on that day, we have the consumer price index for the US dollar. And on Wednesday, we have the consumer price index for the GBP. And we have the retail sales for the USD. So these are quite high impact events that majority in this market will be anticipating, and definitely we shall be seeing the reflection of this anticipation on the chart as price action. So with the information we have here right now, we shall be scaling down to the much lower time frame. That is the 4 hours time frame where I have couple of setups here that we can use to guide trading activity. But before I go into what is really happening now, I want us to have an holistic view here on the 4 hours time frame. And one thing you will first of all notice is that price action is back right below the 1.21 level, an area where price action started the year hot. As you can see, the year started on a bearish note, multiple rejection below the 1.2100 level, leading to price action dropping into the 1.18500, and that has been the lowest point price has ever been for this year. But now, what makes this different here is the fact that during the course of last week's trading session, though the week started on a bearish note, but price action was unable to break the previous low here, hereby finding a new high. And as a result of this might likely be an anticipation of a bullish momentum. As you can see, as soon as price got into the 1.200 level, we saw the breakout of the 1.21 level. That was for the first time in last week to give us a signal that we might be having a bullish momentum here. So going into the new week, what am I going to be looking forward to? What are we going to be looking at to trade the GBPUSD? Well, if we take into consideration this impulsive move that started 2 weeks ago, bringing price into the 1.196, taking that into consideration, we will definitely be using our Fibonacci retracement tool, run it through the previous impulse leg. And one thing we'll notice is that price action actually initiated a selling momentum at the test of the 50% retracement of that previous impulse leg. So with the situation we have here, will this lead to a breakdown of the 1.200 level? Well, We need to see how price action will be reacting to this trend line to decide what will be happening. So what I want to be seeing is if price action breaks down the trend line here, this might likely lead to the breakdown of the 1.200 level where an opportunity to add more position could be very evident. However, if this did not happen, that is, if price action does not break down the trend line here, well, if buying pressure continues above the trend line, leading to the breakout of the 1.2100 level, and if you look at the structure, it shares a confluence with the trend line we identified during the course of last week's trading session. And if that happens, then this might likely be a beautiful opportunity to buy the GBPUSD above the 1.2100 area. I'll pause the video at this point, but be rest assured that I will be jumping right in the comment section of this video to give you an update during the early hours of the week after monitoring how participants in this market will be reacting to this current structure around this area. I hope this video has been of immense help in making your personal decision on the GBP USD. And if it did, kindly support this project by clicking the like button. You would also want to follow me on my trading view platform at Dark Sherry so that you can be part of my daily commentaries as I normally share in the comment section of all of my videos. Thank you for watching this video, and I look forward to seeing you on Monday right in the comment section as we get prepared for the new week. Do have a wonderful evening. Bye bye.